Let's bring in Adam Parker now of Trivariate Research and Sandra Cho of Pointwealth Capital Management. Adam, a CNBC contributor. It's great to see you both. Happy holidays. Sandra, I'll go to you first.
Happy holidays to you.
You do like tech. Do you think it's going to have a great year, or how would you characterize the kinds of returns that you see in 25?
So yes, I mean, tech has had a really great run, and we do see that continuing into 2025. We like certain names. We're looking at Taiwan Semiconductor and Palantir. Tech has a hold on America with AI, and you can see from Apple, which you just spoke about, with their launch of the iPhone 16 and the platform, the iOS 18.1 free upgrade that they have. I have 5 kids, yes, a plethora of kids, and 2 of them are getting an iPhone 16. So if that's an indication of the broad, market as far as iPhone 16 growth, it's pretty good.
Adam, 33% year-to-date gain for NASDAQ. What do you think's reasonable to assume for next year?
Less than that, but it's hard to be, directionally positive on the equity market and not be at least market weight tech. We've talked many times, Scott, you have to own the big names. I don't make that big of a deal out of Apple being $4 trillion. All that means is it started the year big, and it's up the same amount as the NASDAQ and actually less than all the other Mag 7 except for maybe Microsoft. So I don't think the $4 trillion matters. What I think matters is, do you get any proof cases from big companies in the first half of the year that they're driving margin expansion by basically saying, hey, we used analytics in a way we didn't in the past. If you get that from a Walmart or a McKesson or some big company, you'll get another big leg up in these tech stocks.
Sandra, it underscores really, as these stocks have moved up, as we said at the outset, the market's gotten a little top heavy. It's also exposed breadth in the market that recently has been terrible, right? We went through a 14-day or so stretch where you had more down stocks than up, and the ones that were up were largely mega caps. They're so big by market cap that you can still carry the S&P 500 and the NASDAQ by doing that. But do you see that as a sign of weakness to think about or be concerned about?
So I'm not concerned about that, because if you look at the slight rotation that there's been in 2024, you look at the Mag 7 and there's only one name, NVIDIA, that is still in the top 10% of stock market growth in 2024. We do think that there is going to be more broad market participation next year. As a result, we are more equal weighted than large cap growth weighted, for example. And we do think also, and we've been seeing it, that there's more participation in the smaller and mid cap, and we are definitely more pro mid cap than we have been of late.
We started, Adam, Dan and I did, by talking about the Fed and the market's uneasiness with what may happen next year, fewer rate cuts. Maybe we'll have inflationary policies out of the new administration. We just really don't know. You ask several questions heading into the new year, one of which is, when is it time to fight the Fed? Why do you ask that, and what are you thinking the answer is going to be?
Well, I think we learned toward the end of 2022, when they were still hiking, that you could say, wait a minute, they're closer to being done hiking than starting, and we can be bullish again, right? And that's why you really look back, the last trading days 2 years ago right now, it seems crazy, but Meta and NVIDIA were both down over 60%, or huge amounts in 2022, and you had to buy them immediately on Jan 1 23. So the question will be, are we almost, are we halfway done or a little bit more than halfway done? Then maybe we can't be as bullish, and we think about all the things that make us bullish. Maybe that piece of that leg of the stool is a little bit more challenged now, because we're probably halfway done with this interest rate cycle. And so I think it's soon. I think the answer is in the first half of this year, you'll no longer be able to say, first half of 2025, you'll no longer be able to say that the Fed accommodation is one of your bullish points. On the breadth thing, Scott, look, I kind of disagree with how people describe that. I was just looking down at my notes. 71 stocks in the S&P 500 up 40% or more this year. 119 are up 30% or more. And 77 stocks are down 15% or more. I don't know if you can get a better breadth and a better stock picking environment than you had in 2024. I expect it to be tougher to pick winners from losers next year than it was in 24.